taxes and kind of preparing everyone for the upcoming year. And maybe some of you have not filed your taxes for previous years, but it's never too late to file. Feel free to stop me if you have questions throughout the presentation. I don't mind answering the questions, because I'd rather have you remember the question and ask it at the time than not. So with that, I have a slide presentation that I'm going to go through. And if you have any questions throughout that, don't hesitate to ask. Okay. So getting ready for 2022 taxes, gathering and organizing tax records. Why do we want to do that? Organizing your records ensures complete and accurate tax return preparation. It also helps avoid errors that lead to processing and refund delays. It helps your tax preparer help you make the right decisions on your tax return. It doesn't always mean that you're going to be audited, but it ensures that you have all the documentation needed to verify the items on your tax return if needed. What documents will I need for tax preparation? Most income is taxable. You have deductions. You have a lot of things that go on with your taxes. Some things that you guys might not even know that you're eligible for, that you might miss out on if you try to do them yourself and not have a tax professional do it for you. So you have what employee wages and fringe benefits, income from bartering, partnerships, S corps, royalties. Those are generally business returns. LLCs. There's disability, pensions, unemployment, refunds, and interest on the refunds, income from gig economy. That's if you're doing, if you're a musician, or if you just do gigs, like in pickup bars and stuff like that, or you're a traveling musician or something to that effect. Virtual currencies, that is a new thing that's coming out now, because there's a lot of people buying and selling and trading Bitcoins and virtual currencies now than before. There also is Social Security income that may be taxable, and that varies. So it depends on whether you have other income or not. Some of the forms that you might receive are forms W-2 from your employers, W-2Gs, which is gambling income. You might receive 1099 forms from your banks, other issuing agencies, other payers, including unemployment, dividends, distributions from a pension, annuity, or retirement plan. There are also 1099K form, 1099 miscellaneous form, 1099 NEC form, W-2 or other income statements from workers in the gig economy. And those all have to do with generally businesses. There's a form 1099 INT for interest received, along with other documents and records of virtual currency transactions. So there's all different types of returns that you could file, that you might be eligible to file, depending on what's going on, whether you have a business or you have a personal. But everyone files a 1040 individual tax return, whether you have a business or you do not, and you have income. So 1120 is a corporate tax return. A corporate tax return is a business return where the business pays its tax at the time of filing that business return, if they have a profit on that business. 1120S is an S corp tax return. And that's another business return, but it's a pass-through entity return. That means that if you have a profit or a loss on that business, then that income comes over to your personal return. So you're paying income tax on that profit. Or if you have a loss, you claim the loss on your personal return. 1065 is a partnership or LLC return. That's also a business return. And like the S Corp return, that one also, the income or profit also comes over to the personal return. There's a 1040X, which is amended return, and a 990 not-for-profit tax returns. Okay, Schedule A, which is the itemized deductions, that is associated with your 1040 tax return. Now, everybody may not be able to file a Schedule A, and that would depend on whether or not you have enough deductions to file that. The standard deductions, so you either get the standard deduction or the Schedule A deductions, and that depends on the amount of deductions. For single, if you have $12,400 in itemized deductions or more, then you can file the itemized deductions, the Schedule A. If you're married joint, you have to have at least $24,000 in deductions or more in order to file the Schedule A. Head of household, if you're head of household and you itemize, your standard deduction is $18,650. However, always bring in all your deductions, like your charitable contributions, which is cash and non-cash contributions, your 1098 mortgage statements, real estate taxes, medical expenses. And your medical expenses include your dental, your vision, prescriptions, x-rays, all your medical. And you can also claim medical mileage. So, and I'm sure a lot of people have not done that in the past, but there is a deduction for medical mileage. Personal property tax, state and local refunds and taxes, and there's a lot of other different items that fall under the Schedule A. But like this past year, 2021, even though you couldn't itemize, you could still, the IRS gave deductions for charitable contributions of at least $300 that took away from your income on your 1040 tax return. So whether or not you had enough to itemize, you could at least claim $300 of your cash contributions. Schedule C, some people may use it, some people may not, depending on what type of business you are. This is for businesses. So it's a sole proprietor. Sole proprietor is different than filing as a corporation or S corporation or an LLC, two-member LLC, or a partnership. The Schedule C is associated with the Form 1040. So you report your income or your loss from a business that you operated or a profession you practice as a sole proprietor. So you might receive the 1099 miscellaneous, 1099 NEC, and a 1099K. Yes, ma'am.
You said a two-member LLC. If I'm a single-member LLC, what happens?
A single-member LLC would file a Schedule C form, and you end up paying self-employment tax. And that self-employment tax can be anywhere from 15% to 16.5% of that income. So that's a tax on top of your income tax. that you have to pay. So there are several deductions. You're limited on your deductions under a Schedule C. You can claim your mileage, supplies, equipment, professional fees, rent. That means office rent if you're renting an office space, not your home. Equipment that you rent, utilities that you pay at an office, not your home. The internet, telephone, cell phone, those type of expenses. Now, generally, you can also, you get one or the other as far as mileage or your actual expenses for your automobile. So whichever one is greater. However, on your mileage, you need to ensure that you have a mileage log. Your mileage log needs to state the date, where you went, what you did, and your miles from home to back home, or to the next stop or whatever. Because IRS does not, they will wipe that out on your Schedule C if you don't have the documentation. I have a mileage log because I have a mileage app on my phone that records my mileage. So, and that app is pretty user-friendly, because all you have to do is just put in your vehicle information, your frequent stops, and once you put it in, everywhere you go, it tracks your miles. And you can put whether they're business miles or personal miles. So that way, and then you can also print that, you can print that out at any time. I've had that log, the app, since 2016. So I do have records from 2016 to now. So it might be, beneficial that if you do have a business, that you do want to try to get an app, unless you're going to get a pad of paper and write it down every time you go somewhere.
Shellaine, I have a question.
Okay.
Okay, so I'm gonna go back a little bit. I know that you asked to ask the question while you were on the subject, but it was getting so good. I was learning so much. Okay, so back when in the beginning, you know how you mentioned that it's never too late for us to file our taxes.
Correct.
And correct me if I'm wrong. It seems like at one point you had up until a certain amount of years. Let's say, for instance, if I forgot to file my 2017, wasn't at one point there was a time where you only had like a couple of years or something before you would get heavily penalized or something like that?
Well, you don't get penalized unless you owe. That's where all the penalties and interest come in. You only have 3 years from the current year to claim a refund. So if you haven't filed returns for 10 years, you're only going to get that refund for 3 years.
Oh, so anything older than 3 years, you won't see that money. I mean, you just lost it.
Correct. Now, if you have a tax liability that they're collecting on, they'll apply those refunds to that tax liability.
Okay.
But you won't get the money, so you just donate the money to the IRS. And believe me, if you owe the IRS, I don't care if it's a penny or a dollar, they're going to want that dollar. So I just would advise anybody to file and try to file on time. If you can't, there's always there's also a claim for a refund that you can. There's a form 943 is a claim for refund, and if there's extenuating circumstances that didn't allow you to file, there's a possibility that you might be able to get those refunds.
Okay, so let me ask you this, and if you're going to touch on this subject later, I'll stop. Are you going to touch on liens at all? Because you know how you said if you owe the IRS a penny or a dollar, they want it, so they're going to collect. Is there a certain amount of money that you would owe the IRS when they would start putting liens on your I don't even know if I'm saying the right, if that's the right word.
A levy, they could put a lien or levy on your bank account, your house, on your job, on your wages, whatever the case may be. But there is not a set amount. If they want you bad enough and they keep sending you letters and you don't respond, then yes, they're going to levy you. They're going to put a lien against your property. So there's no set amount.
Okay. Thank
Because
you.
I had a elderly lady client where she didn't make much money. She just made Social Security. She only had $5 in her bank, and the IRS levied her for that $5. So they really don't care who they're levying, who they're, attaching wage garnishment to, anything, because they want that money. So that's why I advise you to make sure that you file, even if you think you don't have to file, but if you paid some withholding in, you can get that money back. So I'd advise you to file. Don't give the IRS money, because they're going to get your money at some point. Okay, any other questions yet?
That's it for me. Thank you.
Okay. Okay, types of credits on the 1040 tax return. There's educational credit, American Opportunity, and lifetime learning credits. That's for people that are college students, whether or not you are claiming yourself or someone else is claiming you. There is up to $1,000 refundable education credit for the first 4 years of your education. So, and that's money on top of your refund. So make sure that you, if you have children in college, that you don't let that credit slide through. Okay, and for teachers, there's an educator credit of $250 credit that they can claim on their tax returns. We were wishing that it would go up, because we know that teachers put a lot of their money into their classrooms. It used to be where we could do the unreimbursed employee expenses, but they have taken that away. So now they only are eligible for that $250 credit. Then there's a child tax credit, the economic impact credit, which is the recovery rebate credit, which is also called the stimulus. So if you didn't get it there was 3 that they gave out. There was 2 last year and 1 this year. So if you have not filed and you haven't received that, you can still receive that credit. You just need to file to get that credit. And those that haven't filed, if you know people that haven't filed, tell them they can still get that. If they receive the first credit or the second credit, then they need to make sure that they bring that information with them. Because if you put the wrong information on your tax return, because on the tax return there is a question that says, how much was your first credit? How much was your second credit? If that information is wrong on your return, it's going to delay your refund. Also keep in mind that if you didn't get those stimulus payments and it's on the tax return, that you're eligible for it, and you're supposed to get it along with your refund. If you have a tax liability and that stimulus is on there, then there's a possibility, depending on how the IRS processes your return, because they have done it both ways. So they might send you a separate check for the stimulus, and then you might have a tax liability on your tax return because your stimulus was showing that you got a refund. So you have to be careful. You have to make sure that you try to file early, because if you file late and you don't have an extension, even if you have an extension, if you file late, you're still going to be assessed some penalties and interest on that tax liability. Okay. Then there's the premium tax credit. That's the health insurance marketplace. So whoever has insurance through the marketplace, you get a certain amount of credit. And if you overpay, depending on your income, then you get that credit back. So the money that's been paid in, if your income is lower than what you originally stated when you signed up, then there's a possibility you get that money back. Okay. Additional items to think about. So in 2022, those individuals who received the child tax credit and premium tax credit, you would need to bring in, there's a reconcile, because you need to reconcile your advance payments. So they're going to send you documents that you need to file with your tax return. And you also need to make sure that you bring in your 2021 taxes if you're not going to the same person that already has your tax paperwork from previous years. Those who receive a third economic impact payment and they think that they qualify for an additional amount will need their stimulus payment amount to figure out the claim, the 2021 recovery rebate credit. So that means if you didn't get the full $1,400 per person, because maybe your income was high, then in 2022, if your income has been reduced drastically or just been reduced, you might be eligible for the remaining of that recovery rebate credit. Okay, creating an online account with the IRS. I would suggest that people do that. I know a lot of people are afraid that if they give the IRS their information, the IRS is going to use that information for in and everything, but that's not always the case. If you create an online account, you can check your records, you can check your tax account, your tax return account, you can check to see who's reporting wages under your Social Security number. You can check to see how much your child tax credits are and also your stimulus payments. So that online account can also benefit you also. So I would suggest doing that, because I have had clients where somebody has used their social to report income and they never worked there, they never had any association with that. So, but you're going to be the one that's going to have to prove that you didn't make this income. If you file your return and the IRS sees that, oh, you have additional income, they're going to change your return and send you a letter saying that you owe all this money. So it is a benefit to go out there and create an account and check your information. Okay, where's my refund? So a lot of people, after they file their tax return, they're anxious about that refund. So there's that portal, IRS, where you can go out and check your refund. when you go out and check your refund, they're going to ask for your social, your filing status, and the actual amount of your refund. Not your refund after you do. There's those bank products that where your tax preparer takes money from your refund in order to pay your tax bill when your money from IRS funds. So it's not that amount, it's the actual amount of your refund that shows on your return. Also, it'd be good for you to use your direct deposit information on your tax return, because you will get your refund faster. Generally, when you file a paper return, you might get your refund within 4 weeks, 6 weeks. They might lose your return. So electronic filing is the better way to file. And if you don't want to use your bank direct deposit, you can get a card where you can still get your money deposited on that card. Periods of limitations for assessment of tax. For assessment of tax you owe, there's a period of generally 3 years from the date you filed your return. Returns filed before that date are treated as filed on the due date. There is no limit of when they can assess tax on a fraudulent return or when you don't file a return. There's 6 years if you don't report income that should have been reported, and it's more than the 25% of the gross income shown on the return, or it's attributed to foreign financial assets of more than 5,000. There's a 6-year assessment period. So we want to make sure that we file those returns on time. Period of limitation for claiming a refund, and this is what I talked about earlier, about the 3-year period to claim a refund. So again, make sure you file on time. How long should you keep records? You should keep records 3 years from the date you filed your original return, or 2 years from the date you paid the tax, whichever is later. However, I suggest that you keep your records a little longer than that, just in case you might get audited, and your records means not just the tax return, but all the documents that was used to prepare your tax return, because you may need them if you get audited. Sometimes the IRS audits you after 3 years. So I would suggest keep them for 5, at least. Okay, as a general rule, there's a 10-year statute of limitations on IRS collections. After that point, they generally are supposed to stop collections. However, if they put a lien on your property or a lien on you or a levy on you, because they can renew that as often as they want. So that 10 years may turn into 20 years or 30 years. So just be careful as far as if you have a tax liability out there. Reviewing your tax returns. Ensure that all your Social Security numbers are correct on the return. Ensure that your names are spelled correctly on the return. That means your dependents and yourself. Ensure that your address is correct on your tax documents, because IRS may not see your direct deposit information and end up sending you a check. So that check may go to somebody else. And then it takes a long time to try to get that money back and to prove that you didn't get that money. So ensure that your direct deposit information is correct on your return. Do not sign a return that you believe is incorrectly prepared or fraudulent. Seek additional professional advice if you feel like the return is not correct. It doesn't reflect the information that you had given to your tax preparer. When to file your tax return for 2022. The official start of the tax season begins January 1st, 2022 and ends November 10th, 2022. However, the November 10th date is the last time that us as tax preparers can electronically file your tax return, because IRS cuts it off so they can get ready for the next year. So, but the actual official tax season where we can start filing returns is January 31st, 2022 and through April 15th, 2022. If you don't file before April 15th, then you have to put an extension in. The extension allows you to October 15th, 2022 to file your return. However, October 15th, 2022 falls on a Saturday, so it's extended to the 17th. Now, when you file an extension, filing an extension doesn't give you an extension of time to pay. When you owe a tax liability, it is due by April 15th. So if you don't file your return by April 15th and you file later and you have a tax liability, you're going to end up paying some penalties and interest on that balance if it's not paid by April 15th. Please consult a tax professional if you have any questions. Do not by any means ask individuals that are not versed in tax preparation. You may get the wrong advice. I always say it's cheaper to pay now than later. And that is the end of my presentation. Is there any questions or comments or additional tax advice that you may need?
I have a question.
Okay.
Is military retirement taxable income if you're the ex-spouse?
Military retirement, yes.
Okay. Thank you.
Mm-hmm. Only military that's not taxable is disability. Also, when I'm going to talk about distributions from your 401k, because a lot of people have it in their mind that just because they pay tax on that distribution, that you've already paid tax in, so you don't have to file that. You do have to file that distribution because it's considered income. So just like you get a W-2 that has your income and your withholding, that 1099 is going to have the same thing. It's going to have withholding. So the income and withholding still will be included on your tax return. Also, those that are on Social Security, if you're on Social Security, you draw a pension and you work, you still need to file a tax return. If you have a pension and you have Social Security, you still need to file a tax return.
Hi, this is Al. I just want to remind everybody to unmute their mic.
Excuse me, I got a question.
Actually speak.
Okay.
Hello, can you hear me?
Yes.
I have a question.
Okay.
Yeah. Do senior citizens have to file tax?
Well, it depends. And that's what I was talking about. It depends on if you have additional income outside of your Social Security.
No, if you don't have nothing but a pension check and a Social Security check, so do you need to file on that?
There's a possibility you have to, because your pension depending on how much your pension is, would depend on how much of your Social Security may be taxed. So you still should file a return, or you should seek a tax professional to ensure that you don't have to file.
Okay. Okay, thank you.
Mm-hmm.
May I ask a question, please?
Yes, sir.
I know Reverend Bradford mentioned it earlier and kind of asked about this, but could you kind of just explain your role when you're representing a taxpayer and all the things that it allows a taxpayer to not have to do because you guys are doing it yourselves?
Okay. I do a lot for our clients. So when clients get any letters from the IRS, I represent them as far as getting those problems resolved. So let me give you an example. Somebody came in the other day with a letter. And the letter says that they didn't receive, the IRS didn't receive their 2019 business return. And they got a letter from the state stating the same thing. We know that we filed it. Why they don't have it, we don't know. But we get that power of attorney from our client, and we submit the return along with the letter that was sent from the IRS, and we respond to it. Also, there's times when we might have to call the IRS when the client is here, because the IRS, when a client calls the IRS is in a whole different rare form. But once they come in here and they talk to a professional along with the client, they are totally different. So you might want to remember that, because IRS, they do take advantage of people that don't know. So it's best that you know and you understand before you talk to the IRS by yourself. I would not advise you to talk to the IRS by yourself.
Extremely great question by Alfonso Anderson. Attorney Anderson, we got two Attorney Andersons on the line. Shellaine, and to everybody, and this is just me, the tax filing has become so complicated over the last few years. I'm asking, and I'm to ask people to do what I do. I don't talk to the IRS anymore, as I said earlier, just because of their questioning and the things that they say that will confuse you and cause you a great deal of problems. I give Shellaine the power of attorney over me in that regards, where she talks directly to the IRS, and I do not, and I haven't talked to the IRS in years. And I think, Shellaine, you might want to, if you wouldn't mind, explain to some that may not understand taxes, because some people I find take great steps to finding friends and people who will do their taxes for free, or just because they're doing cheaper is not the best way. And I think I'd like to have you expound on the tax complications these years and how you can get caught up and how going to a friend can cause you to really be messed up.
Okay. A lot of people want to prepare taxes for their friends, for their families, for whoever, but they don't understand how taxes are really prepared. They just think that they can do a return. Now, if that person that does that return for you, they need to have what is called a PTIN. If they don't have a PTIN, then they shouldn't be filing returns. Because for one, they're not going to sign your return. You're going to be the one responsible for whatever they put on that return. So if IRS finds that all these people they may get audited, and you may say, well, I didn't prepare my return. So-and-so prepared my return. And then another person says, well, so-and-so prepared my return. Well, the IRS is still, they may look at so-and-so. They may ask you for information about so-and-so. But ultimately, you're going to be the one responsible for that return. So if you don't have documentation to back up that return, then you're going to be responsible for paying whatever you have to pay back, the interest, the penalty. And it may be, if they look at 1 year and they see that that stuff was fraudulent, they may go back a few more years. So you're not only going to be responsible for that, the current year, you might be responsible for the previous few years back. So you want to be very careful as to who you allow to get your information and prepare your returns. And people also steal your information. So that's another issue too. So you just got to be careful.
You want to tell us how long you've been doing taxes?
Since 1997. I started doing taxes when we had to do them by hand. Everything was by hand, calculator and by hand, and the book. So the reason I started doing taxes is because 1 year I got audited, and H&R Block did my tax return, and I got audited, and then they didn't know what happened. But guess what? I still had to be responsible for paying the IRS back, even though I really didn't know what I was paying it back for. So I needed to know what my tax return, how it was being prepared, the information on it, how it's a reflection of me or whoever else. And so I wanted to know that so that I can help people not be in the same predicament that I was in years ago. And so I do my best that when we have clients come in, that I explain to them all the implications of having, somebody else file their tax return. I just want them to be knowledgeable as to everything that's on the tax return. So I explain to them everything that's on the tax return. I also give them suggestions on how they can best make changes on their tax return. If they don't have enough withholding, then I sit with them and explain to them how to correct those issues so that the next year they won't be in the same predicament.
I want to take a moment to brag a little bit also on this, but Sister Bradford has two other lawyers that's represented with her who have at times had to go to court with people for tax representation. Is that correct, Shellaine?
Correct. So we do. If there's something we don't know, we do have avenues to find answers to any difficult tax questions or issues. Because believe it or not, there are a lot of different issues that do come up. Sometimes we think that we have seen them all, and there's something else.
I just want to reconfirm that the speaker today does not come here novice in what she's doing. She's got years experience and she's very qualified. She's also had to represent people during a tax audit. So when you want somebody that you can trust and people you can depend on, I do highly suggest Shellaine Bradford, B&H Phoenix group right here in Kansas City, Missouri area. Don't take your taxes lightly because they're getting worse. Any other questions? And don't forget to unmute your mic if there's something that you would like to ask.
And also, we do have a reputation where IRS sends us clients because they know that people when people come down there, they know that they don't know how to do their return. They have a difficult return. They have a business or whatever the case may be. They'll send them to us.
I don't think she can say that. She have to look at the tax first. I don't know.
Are there any more questions? Also, one more thing. Just because you have a tax liability doesn't mean that that you have to have that liability forever. So there is different mechanisms and processes that you can go through to get your tax liability waived, or one is uncollectible. That means that if you have a tax liability and you don't make much income, if your income if your expenses in your home or whatever you're paying out outweigh your income, then there's a possibility that we can get it under the uncollectible status. Or you might be able to do an offer in compromise once it's uncollectible. And that means that you may not have to pay on it. The liability is still going to be there, but you won't have to pay on it. But if you get a refund, that refund is going to go towards that tax liability, but you don't have to continue to pay on it. So there's different things that that you can do that you may not know about, but if we can be any help to anybody, we're here.
Why don't you give us that phone number?
It is 816-767-8299. And there's the contact information on the screen.
I want to remind everybody that this video will still be available upon approval of Shellaine Bradford and BNH Phoenix Group 6. If you'd like to have this video for your own purpose to be able to go back and hear it again, you will be able to do that. If there's no other questions, I don't want to cut nobody off now. Just come on in if you want to, but I want to thank everybody for logging in. I know there was a lot of questions that still have not been answered or asked because of the complication with the IRS documents, but you're free to make these calls, and feel free to call her at that number, 816-767-8299. Also, I want to thank the supporting group that is presently here with her. That's Alfonso Anderson and Lakeisha Anderson, who are both online right now, both of attorneys who are very highly qualified, very capable of handling tax situation if it needs be. Not to mention, they are lawyers that can handle other issues or things that may come up in your life. Lakeisha was one that has already been with us and talking to us about expungements. She also talked to us about living wills. As such, she's been here and she's been here supportive. I want to thank both of them, especially for their kindness, their support, their availability. Love them to death. Hopefully to have them back soon for another session with us. I want to thank you for supporting us here at Thoughtful Thursdays, which will be the first Thursday of every month. The next few months are already filled up with a tax attorney. There's another lady that's going to be with us. More than a lady, she's a doctor, Dr. Katrina Strozer. She is actually online with us today. I'm grateful for that. She'll be coming back with us here next month if she's able to, if her workload is not so extensive. So we're grateful for everybody that has come on here. Thank you for your questions. Keep this date of the first Thursday every month in mind, and also keep this login number available at all times, because I do not change it for the convenience of those who want to log in.